In today's video, I'm going to get you guys prepared for tomorrow. Tomorrow is going to be huge. There's going to be the FOMC meeting happening. There's also going to be some of the Max 7 stocks reporting earnings as well. So we're going to dive into the charts. All right, let's dive right into it. Right off the bat, you got the NASDAQ futures once again. And today turned out to be bearish. Again, slightly bearish. In the morning, it went all the way down to, the NASDAQ went all the way down to 27,650 before having a little bit of a recovery intraday. But the bigger picture, when you look at the daily, this turned out to just be a hammer. Like, buyers are trying to support this thing, but we all know where this thing is going to go, right? The only thing that I'm clueless about is how fast we're gonna get there. But for now, the bears are still in control. And as I mentioned in the last video, and I showed you guys this green circle right here, I'm not changing my mind on it. I do believe that we're going to get to at least 27,000. And we might get there from the earnings reactions on some of the stocks that are going to be reporting tomorrow afternoon. Some of them, maybe not all of them, but something's going to be negative for sure. At least one of them. All right. But that's my thoughts on the NASDAQ. Now, regarding the FOMC itself, let's check out the expectations. All right. So this is FedWatch. For those of you who are not familiar with this thing, it shows the probability that we're going to get either a rate hike or a rate cut or no change. Right now, the rates are exactly at 350 basis points. And the odds are in the favor of it staying unchanged and that they're going to leave it there. I don't think they're going to cut. If I'm not mistaken, the last inflation report was actually cooler than expected. It dropped from 4.2 to 3.5, which was good. The PPI also dropped. But there isn't even a little bit of a chance that we're gonna cut. So again, I'm leaning more towards stay the same. If the Fed chair decides to make a cut, like a surprise cut that nobody expects, markets are going to tank because the market don't like that. You for those of you who have been trading for years, you've seen how the market have reacted in the past whenever there is a rate hike, whenever they increase interest rates. The market dumps aggressively for days. All right, so we'll see what happens. Just be very, very patient and just be ready to capitalize on the moves that it will provide. Now, as the title of this video suggests, I mentioned oil spike. So we gotta discuss oil. First and foremost, this is what's happening right now with crude oil. And I shared my thoughts on it before in the beginning of July when we were around $75. I made a video about it. Again, for those of y'all who are subscribed and have been watching the video, I told you all that the oil itself will rebound, especially after the gap down here got filled. This gap right there. All right. And it did pretty well. And I don't think it's over quite yet. I don't think so. And I say this because there's unfinished business at the top. Right here at around $90 per barrel. All right. I think it's going to get there. And if there is bad news, that if they announce bad news, I'm talking about the market makers. If they put out terrible news, maybe escalation of war in the Middle East, something like that, then the futures is probably going to open up at like 86. And out the gates is going to start filling that gap on the left. Now, for those of you who trade futures, this is /CL. But for option traders, we can move on to Oxy. Oxy has wonderful contracts. I like Oxy. They're very, very cheap. And Oxy did leave a gap as well at the top. If you look at the daily, all the way up to 57. All right. So have an alert right here at 57.75 and patiently wait for it to ring, because the moment it rings, then we'll see a big green candle like this that takes care of the gap. Okay. So that's my thoughts on oil. Eventually, I think it's going to get even higher. I'm trying to see if there's a different perspective that I can show you with this one. I'm trying to see. Maybe with something else. Let's see. Apache. Apache looks like a big bull flag. It got rejected previously, but if it ends up not just getting out, but holding and trading sideways through until earnings report, that earnings report in August is going to cause the thing to actually go up to at least 42. So there is an opportunity on this one for the future. Again, this is for option traders. For future traders, I told you guys /CL. That's what y'all should be focused on for a bullish move. Now, let's discuss another stock that I think is going to make a massive move. And I guess this is an update. For those of y'all who didn't watch yesterday's video, I shared with you guys Intuit, right? And Intuit did pretty well this morning. I told you all the reasons why I was bullish on it. I was expecting a open at 307 or 308, followed by the break of the previous high, and that's exactly what happened in the morning. It broke through 310 and it just kept going all the way up to 319.99 before slowing down. All right. And one thing that I really like about this is how it held above this level of support. All right. Old resistance became new support. Buyers again stepped in at the close. The 4-hour chart is still bullish, and all of the buyers that have been accumulating on here, they're not looking to sell until the trend breaks, until this trend does something weird, right? All of these buyers, they're not looking to sell until at least 330 or 340. The red bands that y'all see up here, again, these are gaps on the daily chart. And the stock itself, massive discount. Like one of the biggest discounts in the whole market. And this is part of the software sector. And as y'all notice, money is rotating out of the AI sector. And it's definitely flowing into this one. This one and Adobe and CRM and also Microsoft. So that's the one that we're gonna look at next. Let me go on the 3-minute. Let's check out Microsoft real quick. Now with Microsoft, I thought it would do something special, but it just started to roll over. So I didn't even touch this one today. But I'm gonna clean up the chart. Microsoft is another, this is the biggest software stock there is in the market. It's down by a lot, 30%, and earnings is right around the corner. Some things to worry about, the gaps right here. This is hopeful for the bulls, and the gap up here. All right, so there's two, one at 480, one at 460. Unfortunately, a lot of these companies are spending so much money on AI. Their capex is getting bigger and bigger. Their capital expenditure, that's what I mean, is they're getting bigger and bigger. And the bigger it gets, the more negative the reaction becomes. So it will be interesting to see exactly how this one plays out. The weekly is really struggling. Like it's really struggling and hugging that 200 weekly SMA. But the monthly chart tells the whole story. Do not be surprised if, again, like I said earlier in the video, when this video started, one of them is gonna tank by a lot, right? And the other stock that is reporting earnings is Meta. So either Microsoft is gonna tank to 300 or Meta is going to tank to 500, because Meta got some gaps below, and Meta also looks really terrible on the monthly. Like if I clean up the chart completely, right? you will see that there are a lot of short sellers who piled on from 700 all the way down to 620. It's not looking great. Like, it's really, really not. It's looking very fragile. Support on this one is right here. And the daily chart trend is bearish again. The daily chart, yeah, that's a good reaction. Let me see here. Yeah, like a 8% dump on Meta is reasonable. Like that would be enough to that would be enough to drag the Nasdaq down to 27,000. Yeah, this is much cleaner. If I was if I was willing to gamble on an earnings play, and again, I'm not telling y'all to gamble through earnings. I'm not telling y'all that. But if I was, it would be to short Meta through it for the drop down to 444. All right. There's some gaps below. There's one right here at 537. And then there's another one from last year, Liberation Day, or we say Liberation Week, right at 500, which kind of lines up perfectly with that line. And then there's even one much, much, much lower at 400 exactly. All right. So there's a lot of potential for a drop. There's a lot of levels that it could drop to. The worst case scenario is a dump down to 400. That is the absolute worst case scenario. And a lot of traders will be really sad and also really happy, right? Really, really happy. Again, it depends on how you look at it. Obviously, long-term investors will be piling on shares right here for the long term. This 400 is a great place to buy Meta. I can't wait to see if it can get there. Again, tomorrow will be massive. Tomorrow will be crazy. A lot of traders will be caught off guard. So be very cautious on how you approach this thing. Now, the last sector that we gotta discuss into this video is none other than the semiconductors ARM. ARM is reporting, and I had this analysis on ARM the moment it broke down from the 8th of July, right? So it broke down and was sloppy, and then finally it really started to sell off below 300, and it's been playing games ever since. I had a price target down here of 200 in the middle of July. Obviously, it's taking way too long to get there, so we're gonna shift that to the right, and then we'll see if the earnings report validates the analysis. The bears are in full control of this thing. It's not looking great. It's really, really not. And if this thing tanks, then that would help MU complete the move down, because MU right now is at 822, and that level is still there. Like today, it went as low as what, 792. It didn't really quite get there. The head and shoulders is still in place. The setup on this one is still bearish. Right, so we'll see how fast it can get down here. Could be tomorrow. It really, really could be tomorrow. It's my honest thoughts on all of these stocks. That is the end of the video. Again, do not forget to annihilate the like button. I am not your financial advisor. Do your own research and make your own decisions, all right? Don't forget to follow me on social media at Paul and Gumin at Patternology Lab at Instagram and on X. Again, don't forget to like and subscribe.